Hey, it's Mike from Savvy Nomad. It's January, which means it's time to start thinking about everybody's favorite subject, taxes. We've already put out a ton of tax content on this channel, so in today's video, we're only going to focus on the changes that expats and nomads need to know for 2026. Those are things like new exclusion limits and how President Trump's tax law applies. Let's dive in. First, we'll cover the inflation adjustments to the key expat deductions and exclusions. The foreign earned income exclusion for tax year 2025 was set at $130,000, which represents a $3,500 increase from the previous tax year. Remember that the foreign earned income exclusion allows eligible U.S. citizens and resident aliens living and working abroad to exclude a certain amount of their foreign earned income from their U.S. federal income tax return. To qualify, you must meet two main tests, either the physical presence test or the bona fide residence test. We have individual videos on both of those tests and how you can qualify, so make sure you check out our tax video playlist. The inflation adjustment for the foreign earned income exclusion also flows through to the foreign housing exclusion. The base housing amount, meaning the floor that your expenses must exceed, is set at 16% of the foreign earned income exclusion, or $20,800 for 2025. The general cap on qualifying housing expenses is set at 30% of the foreign earned income exclusion's $130,000 limit. And of course, high-cost cities get their own enhanced housing limits, which the IRS releases each year. Now let's talk about a change that matters a lot for expats who don't use the foreign earned income exclusion, and that's the increase to the standard deduction for 2025. For this tax year, the standard deduction rises to $15,750 for single filers, $23,625 for heads of household, and $31,500 for married couples filing jointly. If you rely on the foreign tax credit rather than the foreign earned income exclusion, which is common for expats living in higher tax countries, this increase directly reduces your U.S. taxable income before the credit is applied. Another important tax change is the increase in the state and local tax deduction. If you're an expat who still pays state taxes, the bill increases the SALT deduction cap from $10,000 to $40,000. We obviously recommend that U.S. expats and nomads change their state domicile to a state that doesn't have personal income taxes, such as Florida. Savvy Nomad specializes in facilitating this process, so if you want to learn more about how you could save potentially thousands of dollars in state income tax, check out the link in the video description and make sure you use the code YouTube for a special discount. Now, if you have children overseas, then you're going to want to pay attention to the changes to the child tax credit. To claim the refundable portion of the credit, at least one parent on a joint return and the qualifying child must both have a valid U.S. Social Security number. So if your dual citizen children do not have a Social Security number, that's something you're going to want to keep in mind. Now, if you enjoyed this video and you want to sink your teeth into some great bedtime reading material, we just released our 2026 Expat Tax Guide. We have over 40 pages of material on taxes for expats and nomads living overseas. So definitely check that out. It's free for subscribers to the email list. Link is in the video description. And finally, make sure to follow our channel. Hit that like button. It really helps us out in the algorithms. We can get this content to more people who really need to see it. Thanks for watching, and we'll see you in the next video.